Something I have been waiting to ask Taylor from Life Goal Investments is about our good friend, his neighbor, Mr. Warren Buffett. Of course, I joke, I tease. But yes, folks, it looks like Warren Buffett sold 49% of his Apple stake. Is this a call on Apple? Is this a call on the economy? Is this Uncle Warren just creating a monster war chest so he can go shopping one more time before he completes his Berkshire Hathaway painting? I don't know what to make of this, but I'm sure Taylor does. How you doing, buddy?
Oh man, this is such an interesting topic. Thanks for bringing it up. It's one of those things where you have to take a step back and go, what does Warren look for? Warren
Mhm.
Buffett is a value investor, right?
Yep.
And so he looks for bargain basement prices to get money to work when there's blood in the street. And on the other side, when everything is rainbows and sunshine, when the cab driver is telling you what to buy, he says, "Hey, I'm out." And
Yeah.
he might be wrong for a while. And that's
True.
the reality. He's incredibly patient, which is very atypical. But it's also why he's the greatest investor of all time. And so he's looking at the market right now and going, okay, where do I see value? I don't. that's
Yeah.
that's
I,
that's
I
the
don't.
reality. Yeah. And so awesome article out from Barron's this weekend that says there's no alpha in public markets right now. And alpha is just the ability to outperform, to provide
Mm,
solid returns.
mm,
And that's their interpretation. And it doesn't matter whether you look at stocks, and I think that's probably where we'll spend the bulk of our time now, but
mm.
also on the bond side, it's not to say there's no value there, but bond yields have compressed. And it's not, glorious to go out and buy a bond right now that yields 5%. Yeah, it looks good versus 3 years ago. But I think the real call for him, obviously, is on the stock side of things because he's a stock investor.
Yeah.
And so he sold half of his position in Apple.
Mm.
And I brought this up a couple times and people said, "Hey Taylor, he's doing it for tax purposes." By the way, the amount of cash he just raised, he's got now $250 billion, something like that, sitting on
Something like
cash.
that. Yeah.
That's not for tax. Guess what,
No,
guys?
no.
He can't sell Apple today like you can. So what
Yeah.
he has to do is he has to wait out over time. Do you think in the meantime he's going to tell you Apple's a shitty investment right now? Get
Yeah.
out? No, because he's still got half his stake to unwind, right? So the
Yeah.
reality is he might play a little headline
Awesome.
game there
Yeah.
and say, "Hey, this is why I'm doing it." But the reality is the market is just fully priced.
Yeah. I do think that when I heard that, I remember Warren Buffett. I remember Warren Buffett in '08. Or really, I think it might have been 2010 when he got Goldman Sachs for 10% plus warrants.
Yep.
Dude, it's good to be king with cash.
Yep.
So I looked at that sale going, oh my goodness. Does
Yep.
he see something on that magnitude? I mean, it's hard for me to see, but again, he was ready. He was ready. And to your point, he was patient. He was probably out of the market 2 years.
Yeah.
Just he was being called names like he's lost his touch, he's old, he should retire. And then
Well, do you also remember his style of investing looking terrible 2 years ago where everyone's
yeah.
like, "Warren Buffett's old, he's lost it, this and that." Now look at
I
him.
I laugh every time I hear that. Like, I was that guy during the dot-com crash. I will never disrespect Uncle Warren again. Oh my gosh.
The reality is, so you look at the market right now, and it doesn't matter whose forecast. So you look at the big firms, whether it's JP Morgan, whether it's Vanguard, whether it's BlackRock, they give capital market assumptions going forward into the
Mhm.
future. And so their capital market assumptions right now are really muted. Say the stock market does 10% per year throughout history over the past
Yep.
100 years. That's
Yep.
roughly what it's done. Vanguard right now is expecting the S&P to do 3.4 to 5.4% per year for the next 10. That's
Lost decade.
pretty darn pessimistic. And,
Yeah.
you look at JP Morgan, they're a little higher at 7.1%. But the reality is, when you look back and zoom out over the past 15 years, the S&P has done 15% per
Mm.
year. If 10's the average, it doesn't take a rocket scientist to say at some point pendulums swing back towards the mean. That's called
Yep.
reversion. And
Yep.
Warren's getting out of the way of that reversion backward. And then when it does revert and valuations look cheaper, he's going to step in and buy a boatload again. And
Oh
he's
yeah.
also not buying the broad market, right? He is target hunting on the best companies where fundamentals get dislocated. The stock looks like it should be doing better than it is, but the market hates it. That's when he's going to step in and pounce.
Yeah, no, he's one of the things you have to appreciate about Warren is that how patient he is. He is ready to set up plays and wait years. And then when he goes heavy,
Yep.
right?
And
When he turns the guns on, he goes.
I think one of the things that he's struggling with in the market is something that I think is being struggled with broadly. And so you look at what's generated the massive returns this year, it's been all an AI narrative.
Mhm.
Right. And so when you look at narratives on new technologies throughout history, whether it's .com, whether it's the railroad system, whether it was the lock system before that, these new technologies they come to market, they have an incredible amount of hype behind them. The stocks absolutely rocket ship higher. And then the market steps back and goes, prove it,
Yeah.
prove
We'll
it.
wait. Yeah, we'll
Right?
wait.
And let me see
Yeah.
what profits this is actually going to generate. And then typically what happens is the prove it stage, stocks come back down that have been magnificently moved by that underlying narrative that's not yet generating the profits.
Mhm.
And then once it's proven by whatever name is proving it, the market will reward it again. The other thing that I don't think is being realized in the market is that when you look back at the .com era, which is the easiest time for us to look back because it's the most recent of this new technological boom, it was AOL, it was Yahoo.
Yeah.
Guess what wasn't there per se? Amazon, right?
Mm.
So they were kind of there. Google was kind of there, but they weren't the incumbents. They weren't
Right.
the de facto winners. But guess what? The Magnificent Seven right now is the de facto winner. It's not to say there aren't new technologies or new AI players that are going to step in and take the reign and run with it. But the market doesn't know who they are. They don't know where they're
Mhm.
coming from, and they're not pricing things accordingly, which is why Warren Buffett is saying Apple has just had this magnificent leap higher after struggling for the better part of a year, not having an AI play. Then they mentioned AI at their conference. Stock pops 22% overnight. And what are they actually doing? No one knows. So
Yeah.
it's one of those things where if it's unknown and a stock valuation is stretched, not necessarily something I want to go in head and shoulders on. And that's what Warren Buffett's telling the market right now.
Yeah. So again, you think this is kind of a combo call about Apple and the economy? Kind of Warren going, hey, it's time to create even more liquidity.
I do think so. I do think that the long and variable lags are starting to paint the picture of, listen, when the Fed goes on these hiking cycles, there's been 13 of them in the modern day era. 12 of them have wound up in a recession.
Right.
So like everyone's calling for soft landing right now, and very well it could take place. I'm not saying it's impossible, but to say that that's the more likely outcome, I think is a fool's errand, right? Or what are the odds? I don't know. I don't know. 1 out of 13, what that makes, 8%, something like that
Something like
ballpark.
that. Yeah. Yeah. Yeah.
So at the end of the day, it's like I don't know that I want to be overextended on that side of things. Take your chips, spread them out a little bit right now. Diversify the portfolio. Don't be hyper focused on stocks that are incredibly stretched from a valuation perspective.
I love that. I love that. Taylor, where can people find you? Because you put out daily content that is must watch.
Thanks so much. Yeah. Find us on Instagram and on TikTok at Life Goal Investments, daily 60-second synopsis.
There you go, buddy.